It's Friday Coffee, baby, with your mortgage man, Eric. Here we go. So today we're going to talk about some more of the market conditions, what's going on, turn times in this market, the refinance boom that's going on, baby, right? Where are we at? What's going on? How does that impact a number of things such as turn times? How long does it take a loan to get through the gauntlet? Truthfully speaking. Let's dive into that. And then I'm also going to wrap this up with going a deep dive into the whole FHFA half a point adverse market fee hit. What does that mean? How does it affect it? Can you explain a little bit more to me about that, Eric? Because I'm not understanding it. So we're going to get into that. But first, turn times, right? Look, we're in the biggest refinance boom ever in United States history. It just is what it is. And it's because there are more homes, there are more homeowners, there are more mortgages out there, there is more volume out there to refinance. And that's one of the contributing factors. There's more people to refinance. So we are experiencing unprecedented volume. And that word has just been so overused this year. And it irritates me myself just to use that word. Anyhow, nonetheless, it is unprecedented volume. We've never seen this type of volume ever before. So what has that done? That has lengthened turn times. And when I talk to consumers about this, I would say about half of consumers don't know or are not understanding. They're not acclimated. And most realtors, maybe about 40% of realtors, real estate agents, are not aware of how this has affected turn times within a lending organization as well. So tune in, here we go. Here's what's going on. When you go from closing 3 units a month and now you're closing 6, when you go from 6 units a month and now you're closing 12, when your branch goes from closing 25 units a month and now you're closing 55 units a month, right? Think about that. Every branch, most loan officers, that is what's happening in their career right now. Unprecedented volume. Loan originators are probably going to make the most income they've made throughout their entire career this year in 2020. I'm telling you, that's where we're at. So what's happening? Lenders can't hire people fast enough. They just can't. Why? Because there's not enough workers. Everybody's hired. Anybody that's qualified to underwrite a mortgage, process a mortgage, right? They're hired. That's just the reality of it. And the ones that aren't, check this out, there is the fear. Well, if I get hired over at such and such company, an underwriter, right, and they offer me this ridiculous amount of money, because that's what's happening. These headhunters are offering ridiculous amounts of money to recruit underwriters and processors and closers. And you signed on for $160,000 for an underwriter? I'm telling you, we're hearing that right now. When things go back to normal, who do you think the first person gets laid off is? Well, lowest tenure. You were the one that just came on, and I mean that's not rocket science. But if you think about this, if you are contemplating leaving your company and going to another company, I want you to understand that this refinance boom will end at some point. Volumes will go back to normal, and companies will have to reduce their workforce. And who's the first one that's going to get chopped? Low tenure, higher paid, right? If they're paying every other underwriter $110,000 and they're paying you $160,000 and you've only been there for 6 months and they've been there for 6 years, guess who gets the axe first? You do. So be smart about that when you're talking to these headhunters or snake oil salesmen, as I call them, because they'll tell you anything they need to tell you to get you to sign the dotted line. You need to be extremely careful. So back to this. Turn times. Turn times, man, have just exploded. It's not unusual to take 45 days, 50 days to get a refinance through the gauntlet. And look, I understand that sounds long, but let me tell you something. There's a lot of our competitors that are 2, 3, 4 months. I just heard Chase announced yesterday it takes 4 months to get through a refinance at Chase, right? There are a number of lenders that will not allow you to lock an interest rate until you're 2 weeks, 3 weeks into the process, right? Or you're out of underwriting. Think about that. I can do your refinance for you, but I can't lock a rate for you. I mean, things are that bad or that good. Depends how you want to look at this. Or that thick with volume right now. You have to try to understand what's going on. So has happened with the turn times with purchases? Purchases have also been affected. Now, most companies have mitigated their purchases, so they're prioritizing. So purchases obviously aren't taking 4 weeks, 5 weeks, 6 weeks, 7 weeks to get through an underwriting queue. They're being treated differently, and rightfully so. However, you can't get a purchase done in 22 and 25 and 29 days anymore. You just can't. If your lenders are being honest with you, that can't happen. And what's happening is, I'm finding that most loan originators are not educating the consumer or their real estate agents with this situation. Look, can you get me 40 days? Can you get me 40 days? I mean, I might be able to wrap this up in 33, 35, but if you can get me 40 for a close of escrow, please do. 45, please do. Please understand where we're at. Yeah, but so-and-so's mortgage company. We hear that stuff all the time. Now, with that being said, I could be untruthful or misleading right here and say, yeah, I could get a loan through the Gauntlet, a purchase product through the Gauntlet in 15 days right now. Sure, I could. How does that happen? Well, I could use one of my platinum rushes, and every company has something that's called, a little something different, but it means the same thing, right? You earn these rushes, and when an emergency happens, you use one. You can't use that on every deal. You can't. You have to be professional about that. Because what happens when you use a rush? Well, everybody else that was in front of you just gets kicked behind you, right? So you're not playing nice in the sandbox with your own employees. 1. 2 is you need to think about somebody else more than just yourself. 3 is use them wisely. Use them wisely. If something falls apart in another lender, which can happen, believe it or not, it happens. And your real estate agent contacts you. Hey, Eric, here's the situation. Can you wrap this up in 20 days? Yes. I can use a platinum rush. I will get us through the Gauntlet in time. But that's not the normal turn times. Use them wisely. So those that are out there, I just got a purchase through in 12 days. Okay, yeah. Okay. So, like I said, so can I, but that's not the normal turn time. Right? So I think what we're seeing is that loan originators are just not educating the consumers and their real estate agent, their affiliate partners correctly with that volume. Now, let's flip into the Mark Calabria or Calabria. I really don't know how to pronounce his last name. I've heard it both ways. I think it's indifferent. Who is he? Who is he? What has he done? How does one man have this much power in the market? So, I'm going to take us back. How back? Way back. In the 2008, right? The recession, the housing bust, and the FHFA was created. What is that? It's just an organization that was created as a result of Fannie Mae and Freddie Mac needing a bailout. Who's Fannie Mae, Freddie Mac? They're conventional loans, conforming loans. They mean the same thing. So if you're doing a conventional loan, it's either going to be picked up and insured by Fannie Mae or picked up and insured by Freddie Mac, one or the other. That's it. Now, Fannie Mae and Freddie Mac are now governed, managed, because they needed managed. It was part of the whole, HOPA Act back in 2008 and, the cleaning up of the industry, yada, yada, that they needed to be managed. So, Mark Calabria is the new director in charge of the FHFA, which just means basically he's in charge of Fannie Mae and Freddie Mac. So Fannie Mae, Freddie Mac, when they got bailed out in 2008, because of all the mortgages that went south because of the subprime era, right, when you could fog a mirror and you get, financing 100% with no money down, no skin out of your pocket, right? That's what happened. Fannie Mae, Freddie Mac needed bailed out. So as a result of that, being bailed out, they're in conservatorship from the Federal Reserve, the Treasury. So, and it did not take them long to come back and be their heads above water. But what happened since I think 2010, which they paid all the monies back. All the monies that they got bailed out with, all the taxpayer monies, you know, you heard all that crap, right? They paid back those bailout funds pretty quickly. And since I think 2010, the the Treasury has been sweeping their profits every year, which is just ridiculous. Not a fan of that. Billions of dollars. Put in perspective, if they would have been a publicly traded company out of conservatorship back in 2011 and to current, they would have been ranked one of the top 5 companies in the country as far as how big they were, how much profit that they were making. But underneath the conservatorship agreements, the Treasury just kept sweeping it every month, every quarter, whatever, taking all their profits, which is a load, right? I don't agree with that at all. These guys should have been out of conservatorship years and years ago. So finally, they're starting to see the light at the end of the tunnel to allow Fannie Mae and Freddie Mac come out of conservatorship and be placed back in publicly traded market, right? A regular company. So in order to do so, they have to make these crazy, ridiculous capital asset requirements. They have to have profit. They have to have assets, right? And a minimum amount of assets, because if this happens again, you want to make sure they have enough money to bail themselves out, right? Blah, blah, blah. So as a result of that, and this is like, I understand what Mark Calabria is doing. I just don't agree how he's doing it. He's like a dog on a bone, like a bulldog on a bone. So he's starting to see the light at the end of the tunnel as far as regulatory items that need to be done and all the requirements that need to be done to get Fannie and Freddie back across the finish line and out of conservatorship. So he needs all these assets. So he places a 0.5 point adversary fee, market adverse fee, onto every refinance product that's over $125,000 in the loan amount, which is 99% of refis in the country. So every lender, doesn't matter, everybody is getting hit with this fee. So what does that do? That has now increased rates another 0.25%. So not only did we get hit, 2 weeks ago in market conditions, but now we've got hit with this 0.5 point adverse market fee. So look, from where we were a month ago to where we are now, we've seen a switch of about 3/8 to 0.5%. So application volumes have come down as a result of that. You have to be careful because unfortunately there's a lot of shady lenders out there that are still, saying, I'll get you 2.5%, but it's going to, they don't tell you it's going to cost you 2.2% in discount fees. What does that mean? Oh, it's just another $7,000 in cost. It's not that big of a deal, right? I'm telling you, there's some shady lending and advertisement practices that are going on out there. Be careful. Be very, very careful. You don't get caught up in that BS. Back to Calabria, 0.5 point adverse market fee. So that is why he put that in there. He wants to get Fannie and Freddie across the finish line as soon as he possibly can. And look, I like I said, I understand why he's doing it, where he's going, but now is not the time. I mean, and I think most of my colleagues would agree that Fannie Freddie should have been out of conservatorship, 5 years ago. Why, we're still having this conversation today, right? But now, look, we're balancing on the edge of recession because of the shutdown from the pandemic, and people have been hindered. Their businesses have been shut down. They've been laid off, furloughed, hours cut, and when they have a chance to take advantage of this refinance at historically low rates, you come in and you hit them with a sucker punch to the face, man. It's just like, really, is now the time that you had to do that? You couldn't hold off for another couple months, a year. You couldn't roll it out in smaller increments. So Calabria has obviously not made many friends. He's not playing nice in the sandbox, much like builders, right? builders don't play nice in the sandbox. That's why 99% of lenders and builders don't get along. I think builders are the biggest snakes around in the industry. That's a whole nother topic. I think I've discussed that on this show a couple times already. Nonetheless, we won't go down that rabbit hole. Back to Calabria, but that's why Calabria has not made many friends in the lending arena, and maybe he doesn't care to make friends. He has a job to get Fannie and Freddie across the finish line. Now, unfortunately, he has blinders on, and he's not understanding how that is affecting. And now, look, he has been wrangled in a bit by the Congress and Senate with some Senate hearings, and so some of his more MBA mortgage advisors. So he's been wrangled in. Think about that. This would be even worse. His stances with some of the stuff he tried to pull back in March would even be a worse effect on this industry if he wouldn't have been wrangled in. So this is Calabria dumbed down a bit. Keep that in mind. I hope that better explains why rates have gone up, what's going on, this half-point market adverse hit fee, why are turn times bad. Your loan originators, man, they've got to do a better job explaining where turn times are at, why turn times are there. I think, look, the majority of realtors maybe are understanding what's going on right now, right? You can't get a purchase through in 25 days unless you got a platinum rush. And again, be careful with that. Be truthful. Don't be out there, I can close your purchase in 15 days. No problem at all. No, that's not the normal. Can I do that on a one-off, on an emergency every once in a while? Sure I can. Absolutely I can. I have enough platinum rushes I build up that I can do that for you. But that is not the norm. When you get me, you're going to get the truth. When you get me, sometimes you get a little bit of the cold-hearted truth. But look, it's better than building people up with false hope, right? With that said, it's Friday Coffee and Mortgage Man there, baby. Woo!